The market, I think we can agree, was too optimistic that a trade deal was going to get done. Is the market now being too pessimistic about the long-term effects on the U.S. and world economies that these tariffs may have?
Not quite. You're absolutely right. The market was too optimistic. As I crunched the numbers, quite frankly, I thought we were about 7% overvalued. Now we got a very sharp decline in prices as we get back to something that would be more realistic, but we're still, Tyler, a little bit overvalued, about 2%. So we need more on the downside to give us some possible upside. So you bet, the market was too optimistic about a trade deal being done. I might add, just really quickly, is that I think the markets were right in being somewhat optimistic. China has a great deal to lose if a trade deal is not done. The president has a great deal to lose when we talk about the 2020 election. If there's not a trade deal done, he needs that farm vote. So I think eventually a deal will be done. But there's no question the market had priced in a little bit too much optimism about a trade deal, and I might say to some extent earnings, but mostly the trade deal. The market had been too optimistic.
So, Sylvia, sort of the same question to you. Is the market reacting appropriately here or overreacting?
I think the market is probably reacting appropriately. And if I look at the flows, the market is certainly reacting. You know, we've seen 100% to 200% moves in volume in bear funds. So a lot of investors are saying, yes, we are now pessimistic in the short term, at least. You know, I would agree with some of the comments made that I think a trade deal is in the best interest for the U.S. and in China. And I think patience is the key. We have to see what happens now in the next couple of weeks and before G20. If we, you know, get a trade deal or get some positive sentiment or some more positive tweets, at least, I think the market can pull back. So we have to see, is this a December dip for a couple of weeks, or is this a longer term thing that becomes a systematic issue for the markets?
Is now the time to sort of assume a defensive posture and go to protection from a correction?
So I think it's, you know, in the last 6 months or so, it's been a good time to at least diversify your portfolio because there are all of these factors. You know, global growth is slowing. Earnings have been positive and surprised to the upside this year, but they are slower than they were year over year. GDP is strong, the consumer spending, but we're probably not going to see those, you know, teens, 20% moves in a lot of indices and underlying stocks. So I think that, you know, we're seeing investors at least position in defensive names, things like healthcare, things like small caps that did well in December, January when we saw the last dip.
You know, Hugh, taking a look at your picks, you've got one defensive name, Walmart, and then you've got two that are being absolutely bombed out because they sort of live at this cross-section of the trade wars. You got Apple as well as NVIDIA. What do you like about those two right now, and are you seeing entry points?
Well, yeah, that's the key right there is the entry points, is that we're seeing some give, not as much give in Walmart, but certainly some give in Apple and some give, quite a bit of give in NVIDIA, and that's exactly what I'm talking about. I think that what I'm really saying is that I think that this is sort of the silver lining behind the dark cloud. In other words, the decline in stock prices is from a level that was very overvalued. We're not quite there yet, a little bit more, and we will be there yet. It'll be an opportunity, and it'll be an opportunity for stocks of the sort that I'm talking about, economically sensitive, and NVIDIA, Apple. And then if you want to have a little bit of defense in your portfolio, you buy a consumer staple like Walmart. So in my judgment, this is all setting up. The one thing I think the important point I'd make is ask yourself the question, is this the end of the current bull market economic interest rate cycle? And my answer to that question is no. So this has to be viewed as a correction, and it's setting up an opportunity in companies just like NVIDIA, just like Apple, and to some extent Walmart.